Good afternoon, good evening, and welcome to the Accendo Traders Group. This is the weekend rapid report for June 1st, 2008. AccendoTraders.com, effective trade plans delivered daily. And on the weekend, we go through our normal routine of preparing ourselves for the week to make sure we're in good trades and out of bad trades. We do add a couple things. We want to read some blogs, some newsletters, see what people are talking about. And we also want to see what's going on with the sectors to see which ones are trending up and down, again, to help us position ourselves for the right trades. This week, we had, as a whole, the major indexes all being up for the week. The one thing I want to point out here is that, look at them, 4.9, 4.6, 4.7. This is the first week that we can actually say that. Because the NASDAQ has been leading the market for the past 2 weeks, they have kind of raised their, it's kind of hard to say because they're all down for the year. But the NASDAQ was down more. But because they've led the market for the past 2 weeks, that they're now down about the same as the other two indexes. So that to me caught my eye. Maybe pointless information, but I thought that was interesting. As we were talking about late this week, that as earnings season has come to an end, we still have a couple earnings, but nothing major, and in a light week of economic data, what's going to drive the market? What is the catalyst? And for this week, it's been oil. And although it looked like it was going to top out and push for new highs, profit taking pushed it down lower, and there are some studies suggesting that Americans are changing their driving patterns. I saw on CNN where they're talking about you can't give away a SUV right now. On the economic front, we had some good news. Personal income spending rose, but it's still well below the yearly target set by the Fed. Inflation data was good. Durable goods jumped up. First quarter GDP was raised higher. Itsy bitsy bit, and new homes sales increased in April, but we're still really low. This week we got construction spending. We got some other things going on, but on Friday we have the employment data, the non-farm payrolls, which will probably have some good market moving potential there. Tomorrow, again, we got construction spending and ISM index. Really nothing on the major side as far as earnings. And we still have one last split play that we're looking at. So let's go ahead and take a look at the sectors. Okay, as we begin to look at the sectors, we kind of have the same story as last week, but we do have more bullish sectors than we have bearish, particularly with the move that we had this week. The market did end up higher. So still, by definition, we do have basic materials bouncing off the 20s, so I like that. Kind of popping its head above the moving averages there. Utilities, by definition, definitely still bullish. Builders, not sure about my ticks here, but I'm going to go with that. The builders are bearish. Casinos, bearish. Coal, nice bounce off the 20 moving average. So yes, that's still bullish by definition. Banks still going to go bearish, even though we're at a strong point here. You can see that this $75, $50, $75 range is a key support area. We bounce, but notice here we're hovering. We got a very distinct bounce here. Very quick bounce here. But now that we're here, we're kind of leveling. And again, remember, we need banks, we need finance, we need brokers for the S&P to provide leadership. Biotech, not much going on there. Drugs, nothing much going on there. Internets, as the NASDAQ continue to lead the market, you can see the internets have come back into our uptrend line. But we got to watch for this double top that's going on here. Got to watch that. Gold, from one of the reports commentaries, we're going to talk about how possibly the gold is going to be heading back down to the bottom here in a strong dollar. Software, certainly strong. Look at this, making new highs here. Gotta love that. Insurance, nothing. Oil services, still technically bullish. Retail, nothing. Stocks, still technically bullish, but we want to break above here to really confirm that bullishness. Transport's kind of blah. Brokers, again, we need them to move to get our leadership. Natural gas, little concern there, so I'm going to hold off. and oil services. So on the bullet side, we've got basic materials, utilities, coal, internet, software, oil services, stocks, and oil. On the bear side, we have builders, casinos, and banks. Okay, so now we're ready to begin the education portion of our video, and we're using the book Trading by Mark. And we're in the second chapter talking about the lore of trading, and this section is about the unwillingness to create rules. And Mark goes on to say that he's never encountered a person interested in trading who didn't resist the notion of creating a set of rules. I've shared at least on 2 occasions about a woman who came into this new group of traders that I was a part of, and she drilled in trade plans, and we all basically ignored her. Now, that doesn't mean that we didn't write down rules. That doesn't mean that we didn't formulate a system. What it means is we wrote it down and ignored it. We kept it on because we wanted to trade and make money. What's this about rules? And Mark goes on to say that the reason some people got into trading, and I disagree with him a little bit on this. I didn't get into trading because of the freedom of creative expression. I got into trading because I wanted to make money. But he goes on to say that this freedom that you get in trading goes head on into a battle to this person who comes up and taps you on the shoulder, says, hey, you got to create rules. And not only that, you have to be disciplined. So I agree and I disagree. I think, yes, we got into trading to make money. No, we didn't want to actually follow any rules while we were trading, or more importantly, we just wanted to make money and didn't really care how, and we didn't want to be disciplined. We just wanted to make money, and we got ahead of the cart. We jumped the gun a little bit. So I agree and disagree with him there. I don't think most people care about the freedoms that trading gives you. Most people don't see trading as creative expression. It's about, did I make money or did I lose money? The need for rules may make perfect sense, but it can be difficult to generate the motivation to create rules. And onto that, to create the rules and follow those rules. Because again, I did create some rules. I did create a system. I just didn't follow it. I just kept on hating. You can't take for granted how much effort and focus you have to put into building the mental structure that compensates for the negative effect and not impulses that you have on your ability to be a successful trader. And what that's simply saying is that you understand that, again, we all want to make money. We all want to be, and that's our goal. And when we lose money, that has an effect on our ability to trade if we don't have a system. Or more importantly, if we don't have our mental structure intact, we have impulses. I mean, there's a reason when you go to the grocery store, there's a candy aisle there. I just moved to Atlanta. Well, I've been here 6 months now. Well, actually, heck, I've been a year. I've been here a year. And they have a store up here in Alpharetta called Fry's, which is, I guess it's like a grown-up Best Buy, for lack of a better word. But what's funny to me, and even Best Buy does this now too, but when you go to the checkout line at Fry's, they've got like a mile aisle that you have to walk down before you get to the register. You got to walk down this long aisle, and of course, what's there? All these little quick buys, candy, and $9.99 stuff, and Best Buy does that too now. At some of the newer stores. Why is that? Because of impulse buying, and I am king impulse. But it's not just cheap stuff. I'll go out and buy a TV for the heck of it. I just got one last week for my office. What's my point? Trading is the same thing. You talk about there are impulses, impulse trades every second of the day, and if you don't have a mental structure to ignore impulses and follow your rule, then you have the potential to lose all your money. Whoops. As always, I want to thank you guys for watching. Remember, to get the full version with a couple other segments, download the podcast version. There's a link here at accendotraders.com. Subscribe podcast.html. As always, we want to thank those people for providing feedback. As you can see, we are continuing to make changes based upon what you say and based upon the type of people who are watching. And then my blog, and again, I want to say I put this in. I mentioned this on Thursday that we have a wonderful article by Dean Callahan on why every trader needs to have a trade plan now. He wrote an excellent article. Please go ahead and read that. Give me some feedback. So go to the blog.michaelglass.com, and not just on that article, on everything, on these videos. Let me know what you think. Let's get a discussion going on. So again, traders helping traders, making sure we're all on the same page and learning together and being successful together. Traders Know the Risk, and I will see you guys later.